Hey, it's Michael, and I'm back with another video. And in this video, I wanted to talk about some terminology. And those terms are convertibility and portability in relationship to group term life insurance, and how the use of these terms in the wrong context can give employees a false sense of security in whether they can keep their life insurance and how it works after they leave employment. And I'm going to talk about these terms right now. Okay, so I'm going to talk about these two terms, conversion and portability, and what they mean as far as how they affect life insurance, group term life insurance once you leave employment. Now, a lot of employees, just to kind of restate, really don't know what life insurance they have at work. They know they got something, but often they don't know what the amount is or how it works necessarily. They just know they got it, and they tend to kind of rely on that life insurance, and then find out too late that when they leave employment that they don't have that life insurance anymore, and they don't own any life insurance on their own, and so they're kind of stuck in a rock and a hard place, particularly if they're older and they've got medical problems and they can't qualify for life insurance. So there's a couple ways you can keep your life insurance once you leave employment. The first is through conversion. Now, conversion means that you change a term policy into a permanent policy. And a lot of times this is maybe done with the basic group life insurance. Maybe there's $50,000 of basic group term life insurance. And if you within the first 31 days of leaving employment, you'll have an option a lot of times to convert that to a permanent policy that you'd pay for on your own that would then last your entire life. Now, first of all, it'll be at a higher rate because permanent life insurance is more expensive than term life insurance because it doesn't end, and it creates a fund value to kind of keep it in force for your whole life. Now, the problem with conversion is that a lot of people don't convert their group term life insurance. And even though it does happen, I've converted some group term life insurance for employees before, more often than not, nobody converts their group term. And here's why. First of all, they may not even know that they got a conversion option. So, a lot of times it just might expire because nobody told them. I know I've left employment before, and no one said, "Hey, you can convert that group term life insurance." So the first reason is people just they're not aware of the fact that they can do it. Now, the second reason is that many times when people look at conversion, they're much older and maybe retirement age. They've worked for an employer a long time, and they've suddenly realized that, hey, if I want to hang on to, I don't have any life insurance, if I want to hang on to that, maybe I can change it to something I can keep, and convert it. So when people do it when they're older, obviously the rates are going to be much higher than if they bought a whole life policy or a permanent policy when they were younger. So right away, age makes this more expensive. Now, insurance companies aren't stupid either, so they know that if somebody wanted to go get life insurance on their own, they just go talk to an agent and try and get a policy and go through the underwriting requirements. And if they didn't have any health issues, they wouldn't have any problem getting life insurance. So insurance companies know that the only people that are going to really look to get that conversion option and exercise it are people that can't go through that underwriting process and qualify for insurance coverage on their own. So they need life insurance that they can get without having to go through any medical questions. And there's that guaranteed conversion window, usually right after you leave employment, that you can do that. So the reason insurance companies aren't stupid is since they know that, they, in addition to the rates being higher because of age, they also price it higher because they know only the people that aren't very healthy are going to want to hang on to it. And so they got to charge them more because they're taking on more risk in order to hang on to that policy for life. So a lot of people don't ever convert the policy because it's just too expensive. So those are the reasons that people typically don't convert their life insurance. So even though the option's there, typically conversion isn't the way that people hang on to their policies. So usually what happens is like on the basic group term life insurance, when you leave employment, then you just don't have that anymore because you're probably not going to convert it. Now, on supplemental group term life insurance, it does work a little bit differently, and that is that you might have a conversion option on that too. It's going to depend on the plan, but more often than not, that plan will either do one or two things. It'll just end when you leave employment. You can't do anything with it after you leave. It just expires. Or what happens is then you can have a portability option. Now, the problem with this portability option is that people don't realize that portability doesn't equal permanent coverage. So you can take this portability of the group term life insurance and continue to pay for it after you leave, and you might pay a similar rate structure that you did while you were working, but those rates may go up at attained ages as you get older and get more expensive, and there's still an end date that would still come. Maybe that might be 70 years old, or there could still be an age reduction schedule, which I talked about in a previous video. So a lot of times when I'm talking to employees and even employer groups about implementing a whole life plan for their employees, they'll go, "Oh, our plan's portable. People can hang on to it if they want." But portability doesn't mean that it's always going to be enforced for somebody's entire life, because those rates can go up and those plans can still end. So probably the most misleading term is, hey, it's portable, you can take it with you. But the question is it always going to stay the same and you're always going to be able to hang on to it? And if you're not, while it's portable, it's still not as good as maybe having something that you could always hang on to, that would always do what it's supposed to do, and that's pay when you die, when you need it. And that's why a whole life option, in addition to the basic group term life and the supplemental group term life, to give employees an option to do that while they're working, makes a lot of sense, because they don't have to worry about conversion or the portability of the group term life insurance, because those two plans, they're not really designed to last somebody's entire life like a whole life policy would be. So by giving employees all three options, or buying your own individual policies outside of work, makes a lot of sense, so you don't find yourself without life insurance when you need it. So that's kind of how I look at conversion and portability, and what I think is important to note about those two terms, and how to not make them misleading, I guess, and how they're used. So if you like my channel, be sure and subscribe to it here on YouTube. If you want to keep track of it, it's a much easier way to do that. If you like the video, hit the like button. If you got any comments or questions, put them in the comments below, and I'll try and help you out with anything I can. In the meantime, I'll see you in the next video.